Let's get some insights in the news shaping the markets. For that, we welcome in Kevin Mahn of Hennion and Walsh. Thank you so much for being here.
My pleasure, Nicole.
So, some of your thoughts on the market, big picture?
Big picture, investors are continuing to grapple with whether we're going to have a hard landing, a soft landing, or perhaps no landing at all. Just 2 weeks ago, remember the big sell-off that took place? Part of that was due to that yen carry trade reversal, but a lot of that was due to that miserable jobs report where we saw unemployment reach 4.3%. Remembering, of course, that the Fed is only forecasting unemployment to end this year at 4%. And then everything turned in a matter of a week as we saw a benign inflation report, a better jobs report, and of course, the prospects of rate cuts.
Right. What do you think? Are we going to see those? Are you looking for September, December, 50, 25, 25?
I think we're going to learn this Friday when Chair Powell speaks after Jackson Hole that all likelihood September will mark the beginning of a very gradual rate cutting campaign over the course of the next 2.5 years. September will be a 25 basis point rate cut. Perhaps we'll see 2 additional 25 basis point rate cuts in 2024. Remembering, of course, they do meet in November and December.
Right.
I think we'll get 2 rate cuts this year, probably a full 1% in cuts next year, and another 75 basis points in cuts in the following year, getting us to about 225 basis points lower in the Fed funds target rate by the end of 2026.
Right, understood. When we think about the market, last week was the best week of the year.
Yeah.
And it came off of a prior week of incredible volatility where people were getting nervous, maybe some capitulation, I don't know, but some heavy selling.
Yes.
So what do you make of that volatility? Do you expect more of that? I mean, should folks buy on dips or take profits now if they're nervous? What are you thinking?
I think there's going to be more short-term bouts of volatility ahead of that September FOMC meeting. Each week we get a new jobs report. Each week get a new piece of economic data. Investors are going to go back and forth between that hard landing and that soft landing scenario once again. But once we get that first rate cut and once we get that updated dot plot chart after that September meeting, we'll have a better indication of what lies ahead, at least for interest rates. But investors shouldn't make decisions purely on interest rate projections because there are so many opportunities available in both stocks and bonds over the next 2 years.
Yeah.
If you just consider that over the next 2 years, Nicole, rates should be lower, yields should be lower, and inflation should be lower. Those are all tailwinds for capital markets.
What do you tell everybody about investing in AI?
Yeah.
I see a lot of names here and there's some others, maybe a different way of getting into AI.
Yes.
Some of your thoughts and the sideways thoughts on AI.
Certainly. AI investing is a long game.
Yeah.
And it goes for companies as well. All their large CapEx expenditures will likely take quarters, if not years, to pay off. But there are opportunities in AI beyond just NVIDIA. Shocking, right? NVIDIA isn't the only AI investment. In fact, we came with a new strategy earlier this month called the AI Ecosystem of Enablers and Drivers. Enablers of AI are areas such as semiconductors and chips and data centers. But there are also drivers of that. How about companies such as ServiceNow, a software provider in that space, Microsoft, another software provider.
Yeah.
I think about hardware companies like Vertiv Holdings. Vertiv actually supplies the infrastructure, the energy, and the cooling solution to data centers. Data centers like Digital Realty. And then if you want another semiconductor play beyond NVIDIA or beyond Taiwan Semiconductor, how about Broadcom? They pay a healthy dividend. They're the 6th largest chip maker in the world, and they have upside growth opportunities in the AI game as well.
Yeah, so chips and semis, hardware, infrastructure, data centers.
Yeah.
Is this a better way to do it? I mean, are you not chasing NVIDIA now?
Yeah, I think you investors want to build a diversified portfolio of hardware companies, software companies, data center companies, and the chip companies as well. But don't just load up into the most crowded area of the market right now, that being NVIDIA and the other Mag 7. There are plenty of other opportunities out there, but recognize this is a long game, and you're going to have to build a diversified portfolio and maintain discipline for the long time to truly reap the benefits of everything that AI has to offer.
Yeah, thanks for all those names.
Oh, my pleasure.
How confident, you were talking about soft landing versus hard landing, how confident are you that the market will head higher, whether it's the end of this year or next year?
if in fact the Fed embarks upon that gradual rate cutting campaign. Right now they're forecasting rates to be 225 basis points lower over the next 2.5 years. If inflation continues to moderate, that should lead to more sustainable economic growth. Those three variables contribute tailwinds to both stocks and bonds. And there's many different areas of even bonds, municipal bonds right now, municipal bond closed-end funds that are trading at very attractive valuations. How about the backdoor play into AI like utilities? All these AI algorithms demand electricity. Where do they get the electricity from? Utilities. So there's other areas of the market that will benefit over the next 2.5 years.
Yeah, tell me about some of the other areas. You just mentioned utilities. We just had a very busy earnings season, which began with financials. Gold is at new highs. Energy seems to be, went up to 80, now it's at 73. What other sectors do you like?
These are more defensive sectors that should weather an economic downturn, a slowdown that we're witnessing right now. How about consumer staples names like Walmart? They seem to be doing pretty well in good and bad economic cycles. Healthcare, a company like Eli Lilly, we just heard their test results that were very positive as it relates to Mounjaro and Zepbound in terms of weight loss and diabetes prevention. And then you look beyond that. How about an industrial name like Lockheed Martin in the aerospace and defense sector? We know we need to upgrade, replenish, and modernize our military warfare capabilities, and defense contractors like Lockheed Martin should certainly stand to benefit from them.
Yeah, Walmart, Lilly, Lockheed Martin. Thank you so much.
My pleasure,
Kevin
Nicole.
Mahn, great to have you here. Hennion and Walsh Asset Management.